one of the major trends that we've seen, and let me know if you've seen this as well, is increasing self-employment, right? So overall, more people self-employed in one form or fashion, and also more of our clients doing well in self-employment, right? Like it's not just side businesses and people making a little bit of money here and there, but people that are, especially on the west side of Los Angeles, having a successful business, you know, and a rapidly growing business. And so as tax professionals, the kind of the pathway, and we talk about our career pathway, right? And we invest a lot of time in talking about that, but also understanding clients' business pathways, where when they start doing well, so they start out on Schedule C, right? They start out as sole proprietor, kind of seeing if they're going to have a real business. Once they make above about $80,000 in net profit on Schedule C, the typical path, it's not right in every situation, but that's normally what will happen, especially if they're growing, you know, 150,000 net, 200,000, 300,000 net, and really going up, is to be into an S corporation, right? So that's a major opportunity area for client value, because there's a lot of tax savings that's associated with that in a lot of cases. The challenge with the S corporation is that there's a lot of mistakes that can happen, and not all of which are our fault, right? Because a lot of these are smaller businesses that are kind of just growing up into being a real business, so maybe they're not having professional bookkeeping or accounting. So they're coming with records that are not necessarily that's a euphemism to say they're not perfect. Maybe they haven't graduated to that full real business yet, right? Is that something that you see? Where they're kind of just trying to get all the stuff together, but they're not quite running it like say a large corporation?
Yeah, absolutely. I feel like that's, like I see a lot of clients, like you're saying, who have started with me as a Schedule C, and then we've gradually converted them into a corporation.
So the opportunity and the client service value is there, and it's something where if you're helping people who have a business that's doing well, they're on an S corporation, you're typically getting their S corporation return and their personal return. Their personal return, because these are people that are entrepreneurial. They often have multiple businesses and rental properties. It's like a, you know, $1,500 to $5,000 type of client. So maybe you don't want to have like 50 of those right now, but if you have like a solid 5, 3, 5, 10, the trade-off though is to play at that level and to really help that kind of client. We have to continue to always raise our game. And a lot of times, like I said, when we're dealing with that client, it could be not your fault and still be your problem. And in fact, that's what you should be expecting. That's what you should be expecting to have happen. So you have a client that has an S corporation that have had growing income. You can usually count on, if they're just starting to really grow their income, they haven't paid their estimated taxes. Okay, so that's the Schedule C mentality, right? Like, I'll just bite the bullet at the end, but not understanding how math works, the whole math thing, where if you apply a 40% tax rate to something before you're applying a 20% and you raise the numbers, you're owing a humongous amount. And so going along with that is the potential for mistakes to happen on the actual tax return. So what I wanted to look at in this training with our new fancy equipment here, we've got some ability to draw on the forms themselves, is this is a practice tax return of a high income or relatively high income and growing S corporation, so 1120S, creative directorship, so a film producing company. And I wanted to see, based on our experience, that we've started to get more and more of these S corporation clients, and I feel like we've started to get better and better at them, as you go, including kind of resolving those issues where it's not your fault. It's not your fault, but it could be your problem. Getting out in front of that, being able to work with the other bookkeepers to fix problems, right? But as a starting point for this training, I wanted to see if we could look at this actual tax return and see where are the areas that are most likely to have problems, Because correct me if I'm wrong, when you take on one of these type of clients, you have a mix of excitement because you're really working with a growing business. They're probably doing really well in their field. I mean, you have to be pretty skilled to bring in $2 million of revenue, right? You have to be pretty skilled at business. You're working with somebody that you probably are learning a lot from. You kind of enjoying working with them. It's engaging, but there's also that anxiety, right? Like, what about the mistakes? What about the problems? What do I really need to watch out for as I do this work? So having done enough of these now, we can kind of see what those areas are going to be. And so I wanted to, first of all, just note that with an S corporation, the amount of total sales, if someone's bringing in almost $2 million and as opposed to the year before, like in this case, the example is, the sales have almost doubled. Getting on as a starting point with that business owner, getting on the level of their business, congratulations. Like that, like what is going right? Now, before we start talking about taxes, right? Let's talk like business person to business person to say like what explains this? Like, great job. This is great. How's it going? And also understanding that what people do to raise their income that much to that point, there's, just like we've talked about in our careers, there are sacrifices that are being made. Like, hey, are you still keeping up on, like how is this, do you feel overly busy? Like, what's your person, getting on, really understanding what they're going through to get to that point. And I think the best tax preparers, especially CPAs, can really discuss the overall business with the person before you get into just trying to do their taxes, right? What went right? What accounts for this large increase in income? The second thing that I would see here that can be a problem is what do you get with an S corporation that's very appealing for that came in with the tax reform, the Tax Cuts and Jobs Act, the QBI deduction, right? So you can see that the wages, so on 7 and 8 on an S corporation are the wages line. So if you can see, the profit down here is significant, right? The net, it's over $1 million. Remember, with the QBI deduction, once it's over those income, once it's kind of like a real high income 1040, so the S Corp is going to push on to the 1040. Right. So you're always doing the S Corp return first, right? You get one of these clients, we're like, well, we know we got to do the company return first because that's going to flow on to your personal return. Right. But you can see that the wages, I have a concern with this amount of wages because it's not that much. And remember, with the high income with QBI, the wages affect the limit. The wages affect how much QBI deduction you can get. You can only get up to 50% of wages as your QBI deduction. So if we fast forward just a second here and look at so this is the K1 for January Gray. I thought that was like a good client name too. But if you look so on your side, Ingrid, with the paper copy, this would be page 8. And we're on the 1120S, so page 8. And this is actually really if you haven't dealt with a lot of S corporations, it just looks like a giant pile of paper at some point. You're just like, what is going on here? There's a lot going on. So that page right there.
Sorry,
so,
what page numbers?
That's it, yeah, that's it. So if you can see that, the W-2 wages, 108,067. So what's 20% of $1 million is basically 200 grand, right? So the amount of wages that the company is paying is going to affect the amount of the QBI deduction that a high earner can get. So I might want to know, does that make sense overall? It might sound like a little bit of gibberish, but does it make sense?
Yes.
So when you have an S corporation, whatever amount of wages you're paying, if you have a high income, if you're not paying enough wages, I should say, you can not get your full QBI deduction.
Let me see.
So as you're looking at a high income S Corp, especially one that this is the first year they're really kind of making that much, that's like a problem that can happen, right? So you might just overall kind of looking at this return and saying, what can go wrong, right? You also want to look at, you really have a high profit margin, that's something that's going right, but it's also like
Rolls and taxes.
not enough write-offs,
Yeah.
right?
Yeah.
You're right, so you're thinking of that. When you're kind of setting up an S corporation return, Cynthia, on and especially with a higher income one like this, what are like the main things that you see kind of a lot of times going wrong, maybe towards the beginning of the process, or something to watch out for?
Well, let me start off that I don't have any client making $2 million. So I don't see, I probably would say less than $1 million. But problems that I would say, I would just say a lot of times it's not very clear to the client, like the biggest question I get for this type of client throughout the year, how much should I pay myself?
Okay. And that's a question to kind of designed around how to save the most in taxes?
Correct.
That's the motivation of it, okay.
Not just the motivation of saving taxes, but doing it properly, because a lot of times, maybe they've only paid themselves $10,000, but my net is $100.
Right.
And that's not gonna fly.
So you're looking at line 7 on the front.
Mm-hmm.
That's a key number for that, for an S corporation, is, are you paying enough of a reasonable salary?
Reasonable.
And is that optimized for your taxes? And the clients themselves are more sophisticated, so they know that affects it.
Mm-hmm.
So that would be definitely a primary thing that you would look at.
Mm-hmm.
So that would be something that you would want to look at, and that's on 14A. So I guess that's on page 4. Yeah, 14A. So did you make any 1099 payments that are required? If someone's making a significant amount of revenue and they're not issuing 1099s, they're probably not having their bookkeeping done. They probably don't have a bookkeeper, right? Or maybe, kind of had one but then don't, and it's not being taken care of. So when you're getting into doing somebody's taxes that's at this level of income, you want to know immediately who's doing the bookkeeping.
Mm-hmm.
And you can usually tell by the reports that you would get whether,
Absolutely.
right, how it looks. So you want to identify that for sure. I want to point out as well, on the credits section. So that's on page, so just down from the 1099s on page 4 on the Schedule K. You see this 19,747?
Sorry.
It's back from there. It's more towards the beginning. So
The Schedule K1?
the Schedule K, the page 4 of the entire document.
Okay.
One more, yeah.
Okay.
Do we have a 19,000? Actually, one back from that, Cynthia, one more page.
Sorry.
Yeah, no worries.
19,000, yeah.
Okay. So that's the research and development credit. This is a credit that is, that's missed out a lot. And for example, anything in your business that is experimental and you're paying wages or even contractors to do that, there's a tax credit that can be pretty significant. Like this is like 20 grand. So if you have somebody that has like an arts-based business, even like Cody, the gentleman that's doing this, like, hey, did you do any projects this year that were kind of more experimental, or were more even building like internal software, like us developing our software that we built for our office. So this is something that like a CPA that does $2 million and up returns all the time we'll make an analysis of this. So just keeping in mind of these other credits that are not every day, and feeling, at least having that in our, in something that we think about. This is probably one of the biggest ones for the overall, like, is the balance sheet going to balance? That's probably the biggest overall. You're like, am I even going to be, how's this going to work out on the balance sheet, right? Having done these, you're like, how? So the distributions, and Imelda, I remember you and I worked on a couple returns like this, where how much distributions the person took out of an S corporation is going to affect the balance sheet.
Mm-hmm.
So when somebody gives you their accounting records, where are you getting the distributions from for an S corporation?
Balance sheet.
The balance sheet, right? With these smaller S corporations especially, they may have it on as a expense,
Mm-hmm. Mm-hmm.
right? So with the kind of like trying to get the info into the tax return from the accounting records, you want to know how much distributions came out, and that's going to go on that line 16D for distributions. So if you don't have distributions on the balance sheet, or let's say there's multiple shareholders, you're missing a very key piece of information for this tax return, and it's missing a lot,
Mm-hmm.
right? Or it's miscategorized a lot.
Thanks for watching. If you found this session helpful, we invite you to join our Pronto Tax School memberships. You'll get access to weekly live mentor support sessions like this one, plus tens of advanced tax course trainings, private groups, special discounts to in-person events, a tax business growth coach, and so much more. Check the links in the description to learn more about our Dream Team and Forever Edition memberships, and join us today.